Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
Gold growth in Africa. This is Paul Harris for Kitco Mining at the 2024 Gold Forum Americas in Colorado Springs. Joining me today to discuss this is Ian Cockerill, CEO of Endeavour Mining. Ian, welcome to Kitco.
Good morning, thank you, Paul.
Now, it's been a bit of an up and down year for the company, but let's start with a positive. In July, you made the first gold pour from the Lafigué Mine in Côte d'Ivoire. That will produce over 200,000 ounces a year. What will that do for the company overall?
Well, it's, I think, another step in the growth profile of this company. It will be the fifth mine that we have built in West Africa over the last 10 years. And during that period, we've developed and built 5 projects on time, on budget. And I think that's really a great testament to the quality of our project management team. So a very positive improvement. As I said, the 200,000 ounces of increased production coming into the company, a very positive addition to the profile and the track record of Endeavour.
Okay, and what else is to come in your pipeline? What do you want Endeavour to look like in, say, 3 to 5 years' time?
Well, we're going to be announcing at the end of the year the results of our pre-feasibility study on our Assafou project. That many people may remember that as Tanda Iguela, but it's now become the Assafou project. This is going to become a very, very important project for us. The pre-feasibility completes at the end of this year. We'll then go straight into the definitive feasibility study in 25, hopefully with an investment decision early in 26, and based upon our normal track record of 2 years of construction, somewhere in the early to mid 2028, then we'll have another project online. Now, this is going to be a big project. It's much bigger than most other things that we've seen. We're starting out at a 4.5 million ounce resource, so it will be larger than some of the other mines that we've produced, probably around about a 5 million ton a year. So probably that's going to be north of 300,000 ounces of production. So we're really quite excited about that. And what's really exciting about Assafou is not just the existing resource, which seems to be getting bigger even as we sit here, but lots of satellite deposits around there as well, which we feel will complement and supplement the feed going from the existing Assafou pit. So that's very good for the future. In addition, we have at our existing Ity mine, we're seeing potential for a super pit that we could produce. That gives us the optionality of looking at larger equipment, lower mining costs, greater productivity, and extending the life of the Ity mine as well. So lots of organic growth in our pipeline.
And once this organic growth, once you've delivered on that organic growth, Ian, what will the production profile of the company look like?
We'll probably be looking, by the end of the decade, we'll be looking at somewhere which is much closer, to the 1.4, 1.5 million ounces of production. So some of this, the new projects will be additional ounces. Some of it will be supplementing the natural decline from some of our other operations. But we're seeing a slow but steady growth towards the end of this decade. And
that will put you within the band of a very select group of companies at that level.
Well, we're already one of the top 10 pure gold producers in the world. So, but all this does, it just cements our position and makes us even more attractive than we are already.
Okay, it hasn't all been good news this year, though. Your share price is flat, more or less, year to date, where a lot of your peers are up 50 to 100%. You've had issues with the government in Burkina Faso, and obviously the situation in Mali. I imagine that's been an overhang as well. Where are we, and what happened in Burkina Faso? And let's talk about Mali as well.
Yeah, let's start with Mali. We don't have any operations in Mali, so that's not really an issue for us. And obviously Mali and Burkina Faso and Côte d'Ivoire, all very, very different countries. As far as Burkina Faso is concerned, a couple of years back we sold 2 assets in Mali to a private company. Unfortunately, that company was not able to conclude the contractually agreed sales process. The government of Burkina Faso stepped in and said, we would like to acquire those assets. They acquired them on commercial terms. So despite the fact that some people have characterized that purchase as a nationalization, it's far from being a nationalization. It was a properly commercial undertaking. We've already started receiving money from the government. Also, the government have asked us, would we be prepared to assist with some form of technical services agreement for the first 12 months? And we said we're delighted to do that. I would characterize the relationship that we have with the Burkina Faso government now as being very strong, very sound, very much recognizing the advantages that both sides bring to the relationship. So we're comfortable, and we're seeing certainly a government in Burkina Faso that wants to encourage investment, recognizes the need to be seen, to be acting as we would expect most governments to act. It's quite positive there now.
Excellent. Now, Africa seems to be getting a lot more attention in the gold space. AngloGold Ashanti recently made a £1.9 billion bid for Centamin. Do you expect to see more M&A in Africa as some of these sort of country risk overhangs evaporate and become history?
I think on the particular circumstances around Centamin, it's a single asset company. And I think single asset companies clearly are going to become, they are a bit more vulnerable than the companies like ours that are multi-asset. So there could well be a kind of industrial logic in terms of absorbing single asset companies and bringing them and de-risking them and bringing them into larger businesses. So yes, there are more assets out there. I think people's perception of risk in Africa ebbs and flows. But we as a company, we understand not only how to manage the risk in Africa, we also recognize that there is a corresponding improved reward profile working in Africa. And if you can manage that risk, and if you're prepared to sort of work through the noise, I think that working and operating in Africa offers very attractive returns for those investors who are prepared to accept a slightly elevated level of risk.
Now, a number of the companies I've spoken with over the past couple of weeks that have assets in Africa often talk of the reduced permitting times in many countries compared to, let's say, the Americas, and cheaper cost of developing assets. Now, you've got quite a pipeline to work on at the moment, but do you see opportunity to add to your portfolio through perhaps taking out some of these single asset companies?
Look, we have got a lot of, as you said, a lot of opportunities organically within the company. And that's where our principal focus is and will remain. However, running in parallel to that, we constantly monitor the sort of the universe of gold opportunities. We have very strict investment criteria. And if we see something that satisfies our return criteria, of course we would look at it. But there's nothing specifically at the moment that we are involved with. But at some stage, if you look at the company as it is today, it grew very much out of a very active and aggressive M&A program. But now, the situation has pivoted a little bit. We've got to make what we've got work strongly. We've got to prove to our investors that we can deliver on what we say we're going to deliver. Then I think we'll get the credit. And say if there is an M&A opportunity, then I think our investors will be more inclined to accept us doing something.
Okay. Now, one thing, this you may call it a trend, you may not, but a number of companies that have been characterized as African gold producers, I'm thinking of AngloGold Ashanti, Goldfields, for example, recent years have seen them sort of moving out of Africa. Why do you think that is? Is that something that Endeavour will eventually look to do as well?
Well, look, I think that the honest answer to that, Paul, is that mining assets are finite. You cannot just keep on mining something if it's not there anymore. So God had a sense of humor when he made gold mines. He put them in some interesting places. But once the asset is either completely exhausted or overly mature, then if you want to continue, you have to go and look elsewhere. And you have to go and find your mines where they are, not perhaps where you'd like them to be. So I think it's inevitable that at some stage in the future, I don't know when, that a company like Endeavour will have to start thinking about operating away and outside of its current home base, which is West Africa. We're comfortable in West Africa. West Africa has been very good to us operationally, developmentally, as well as discovery of ounces. But if you keep on fishing in the same pond, eventually you run out of fish. So it is logical that at some stage in the future, we should start thinking about expanding our horizons. So I think it's inevitable that will happen over time.
We are at a gold conference in Colorado, North America. How does gold production in Africa resonate with investors here compared to, say, investors in London or elsewhere?
I think certainly there is a greater affinity for African gold mining out of Europe, out of London. I think because of the historic sort of issues around French, British, even Italian sort of influence in Africa. Less so here. I mean, here probably a greater predominance of interest in South America. So, but we have a strong shareholder base out of North America, and they're comfortable with what we're doing. So there will always be interest in Africa from around the world, but obviously greater concentrations in some places other than others.
Now, one of the underlying themes of the sector in recent years has been capital discipline and focus on return to shareholders rather than investment in growth. You're obviously doing a very different strategy. How is that resonating with investors? Are you starting to see investors warm to sort of growth strategies again?
Well, I think if you look at Endeavour, for the last, since 2021, we've had a very disciplined capital return program. We have a dividend policy that says we guarantee a certain minimum, and then over and above that, there will be supplementary dividends paid out and share buybacks based upon the company's ability to pay for that. From between 2021 and 2023, we paid out $903 million returned to shareholders in guaranteed dividends, as well as the supplements and the buybacks. We have now gone on to the second phase of that program for 24 and 25. And what we said is that we're guaranteeing that we're going to be paying out $435 million over those 2 years, $210 in this year and $225 in 2025. In addition, subject to decent gold price, subject to our performance, we will give supplementary dividends as well as the share buybacks, all whilst we're deleveraging our balance sheet. And over the next sort of 12 to 15 months, our growth capital is minimal. But we want to be in a position where we can give shareholders returns today, but still retain a balance sheet flexibility that will enable us to continue to build our mines, because building mines sustains the dividend, the capital return program over the life of the company. And we're in a very good position to be able to do both. So you still have growth, but you still have returns today. So it's a bit of a cake and eat it approach.
Well, the gold price hit a record $2,600 per ounce last week. It's up $500 to $600 per ounce this year. With that additional capital that I imagine you didn't budget for at the start of the year, how will that change your capital allocation policy or not? Will that see you give more returns to shareholders, pay down more debt, or put a bit more aside for your capital development program?
Well, certainly, we will be doing an element of deleveraging. We're saying that we're going to be comfortable with a net debt to EBITDA of about 0.5 times. We're currently at about 0.8, so we're at peak debt level at the moment. Over the next sort of 18 months, getting down to 0.5. That puts us into a very sound position in preparation for the next build program. But in addition to that, Obviously, the higher gold price gives us greater flexibility to add supplementary dividends and, to look opportunistically at buybacks as and when we see the situation developing in the market. We have done that over the years. We will continue to do that. And I think shareholders can look forward to some very attractive returns from Endeavour without impairing the future resilience of the business. I think that's important.
Okay. Now, Ian, to wrap up, what are some of the key milestones for the company over, let's say, the next 6 to 12 months?
Well, first one, obviously, is the announcement of performance for 2024. So the investors can see that we are back on track, we are delivering. Secondly, we'll be looking at the announcement on the pre-feasibility on the Assafou project. We'll also be giving an exploration update, specific attention around Ity and how the exploration program has shown, we've got a very interesting project potential there as well. I think in the short term, those are the three key areas. And last but by no means least, obviously, the announcement of the size of the dividend check. That, I think, is going to be important for shareholders too.
I imagine a lot of people are going to be looking out for that one, Ian. Ian Cockerill, thank you very much for joining us today.
Thanks, Paul. Thank you.
And we have a lot more to come from the 2024 Gold Forum Americas, so hit that subscribe button to see all our videos. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.